Are you worried about how to protect your money during a recession? If so, you're not alone. A recession can be a scary time for investors, but there are steps you can take to safeguard your wealth and potentially even come out ahead. Welcome to Posh Pros, and in this video we'll go over 4 strategies you can use to protect your money during a recession. Whether you're a seasoned investor or just starting out, these strategies can help you navigate the choppy waters of an economic downturn. For many people, the recent economic downturns and recessions have been a wake-up call. While the economy had been on an upward trend for years, the recent economic challenges have left many people wondering how to protect their money and invest for the future. In order to protect your money during a recession, it's important to diversify your portfolio. This means not just investing in one type of asset, but rather spreading your money across a variety of different investments. By diversifying your portfolio, you can mitigate the risk of any one investment underperforming. Number 1. Cash or cash equivalents. One strategy you may want to consider is keeping some of your funds in liquid form, such as cash or a high-yield savings account. During a recession, it can be helpful to have access to your money quickly and easily. That's where cash and high-yield savings accounts come in. These types of accounts allow you to access your funds whenever you need them, whether you're paying bills, making a purchase, or just need a bit of extra cash on hand. But that's not all. Keeping some of your money in liquid form can also offer other benefits, such as the potential to protect against inflation and the opportunity to earn a bit of interest on your savings. So if you're looking for a low-risk way to invest during a recession, consider keeping some of your money in a liquid form. Number 2. Bonds. You may want to consider adding bonds to your portfolio. But what are bonds, and why might they be a good choice during a recession? Bonds are a type of debt security that are issued by governments and companies in order to raise capital. When you buy a bond, you are essentially loaning money to the issuer in exchange for a fixed rate of interest and the promise to pay back the principal at a later date. One potential benefit of investing in bonds during a recession is that bond prices tend to go up when stock prices go down. This is because investors often flock to the relative safety of bonds when the stock market becomes volatile. However, it's important to note that the value of your bonds can still go down depending on the creditworthiness of the issuer. If the issuer is at risk of defaulting on its debt, the value of your bonds could decline. So while bonds can be a good way to diversify your portfolio and potentially earn a steady stream of income during a recession, it's important to do your research and carefully consider the creditworthiness of the issuer before investing. Number 3. Stocks. When it comes to investing in stocks during a recession, it's important to keep an eye on the long-term potential for growth. While the stock market may be volatile in the short term, it can also provide opportunities for long-term growth. One way to potentially benefit from this growth is by investing in companies that are able to weather the economic downturn. These companies may have strong financials, a proven track record of stability, and a well-defined business model that allows them to adapt to changing market conditions. If a company is able to navigate the challenges of a recession and emerge stronger on the other side, its stock price may reflect this success. This can provide an opportunity for investors to potentially earn a positive return over the long term. Of course, it's important to remember that investing in stocks carries some level of risk. It's possible for stock prices to decline, even during a recession. That's why it's important to do your research and invest in companies with strong fundamentals. Number 4. Real estate. If you're thinking about investing during a recession, you may be considering real estate as an option. But is investing in property a good idea during a downturn? Let's take a closer look at the pros and cons. One potential benefit of investing in real estate during a recession is the potential for steady rental income. If you buy a rental property, you may be able to generate a regular stream of income from tenants. This can provide a source of financial stability during a challenging economic time. Another potential benefit of real estate investing is the possibility of appreciation. If the value of your property goes up over time, you may be able to sell it for a profit. This can provide an opportunity to earn a positive return on your investment. However, it's important to be cautious when investing in real estate during a recession. The value of properties can decline in a weak economy, and it may be more difficult to sell a property if the market is sluggish. It's also worth noting that real estate investing can be more complex than investing in stocks or bonds. You'll need to consider factors like location, property condition, and financing options, as well as the costs of maintenance and repairs. In conclusion, it's important to have a plan in place to protect your money during a recession. Each option has its own pros and cons, so it's important to consider your financial goals and risk tolerance when deciding which strategy is right for you. It may also be helpful to speak with a financial advisor to get personalized advice and develop a diversified investment plan that's right for you. By taking the time to do your research and make informed decisions, you can potentially safeguard your wealth and come out ahead during a recession. Thanks for watching, and we'll see you in the next one.